On this podcast episode, we're going to be playing a game we call the Money Doctor, and we're going to be helping business owners identify common problems in their business, the symptoms of these problems, and how they can fix the problems in their business. So stay tuned for this week's episode, and we're also going to be talking about this week's tax tea, where a fisherman could be getting up to 5 years in prison for doing some pretty fishy tax stuff. Stay tuned. Welcome to the podcast where we tell small business owners how to use the secrets and strategies that big businesses use to increase their profitability. Welcome back to another episode of The Stuff Your Accountant Isn't Telling You. I am Lola Turner, your host, and I am joined by Terrell Antonio Turner, my fellow host of the Stuff Your Accountant Isn't Telling You podcast. Welcome, Terrell.
Hey.
How are you doing? I'm good. How are you doing?
I'm tired. I'll be honest. I mean, we're cranking through, beginning of the year, getting things started off right, helping some people dig out of a hole that they found themselves in. But it's all good because it's all part of growth and helping more business owners.
It is. And we have the pleasure of doing that. So very exciting. I'm excited about today's episode, especially the game. Pretty excited about this game, The Money Doctor, and excited to jump in. So why don't we go ahead and get started?
I would say, before we jump in, one of the things that I wanted to say about, I was pretty excited about today is I got a message on LinkedIn from someone. Okay. They sent me a message to connect, and they said, hey, love to connect because I heard about you from this conference that they went to. And it was the Mogul Millennial Pitch Conference.
What is that?
Like, I don't even know what it is. But I looked it up. Like the Mogul Millennials. I mean, it's a pretty big deal. There's a lot of like startups are going through that program, and I guess they had a conference, and I messaged the person, thanked them for connecting. They were like, yeah, while I was at the conference, pretty much I was having a problem with trying to find, a good accountant, that's great for like, early stage businesses, or that can provide some, good feedback and good support. And, your name kept coming up. I was like, oh, wow. I was like, I need to find out what this conference is. And I think that's just a testament to like the great stuff that we're doing with the Stuff Your Accountant Isn't Telling You. Is the stuff we're sharing is really helping people. And I mean, the word is getting out about what we're doing. So I wanted to share that because I hadn't told you that yet, but I got that message today.
No, you had not told me that. And that is actually pretty exciting. And I think it's also very encouraging considering it is 9:30 p.m. when we're filming this after a very long day. And definitely is just going to fuel me to continue going. I do want to say, in light of that, I would actually like to give a shout out to Duddy Wiseman. Okay, so Duddy is, Duddy, I hope I'm pronouncing that correctly. He is a listener of the show, and he had recommended the podcast and actually gave us a pretty good review on just the podcast. So I just wanted to give a shout out to Duddy. Thank you so much for listening. And I think it's very exciting when we do these podcasts, like when we launched episode 1, and we were like, man, like how many ways could we possibly talk about accounting? And we are 37 episodes into talking about accounting and finance, specifically for business owners. So very exciting. And we have some more amazing content for the business owners that are listening. And thank you so much for tuning in every week, because, we do these every week. And personally, for me, like I do this and to help people, but sometimes, you just don't really know like what's going to hit. I mean, realistically and honestly. And I'm just happy that, people tune in and people are actually finding this information helpful. So thank you guys for listening to the episodes. And
I mean, and I think that's the amazing thing about the angle we decided to take with this show is, really getting the feedback from people, because there's so many different ways as you can have a podcast. And so in listening to the feedback, because this isn't our first podcast. I mean, we've had multiple iterations of different styles, different approaches, and really listening to the feedback of people. And one of the big things that people were talking about is, there's a lot of people out there talking about accounting and finance and talking about how it relates to, your business, or maybe they're talking about the accounting industry. That's just for people that are accounting professionals. But one of the things that they said was missing was like someone who can actually break down the accounting and the finance, kind of break down the technical stuff and
Yeah.
help me understand, how do I actually use this in a business? And so one of the things that I really, appreciate is some of the feedback we've been getting, even from other accounting firms, of saying like, hey, the stuff you guys are talking about on your show, we
Yeah.
are actually trying to work on that with our clients. And
Yeah.
so having, other accounting firms reach out and say, hey, pretty much what they're saying is, hey, we're learning how to give better service to our clients by listening to your show. And
Well,
I'm like,
that is very complimentary. Yeah, that's very
yes, yes.
complimentary. And you know what's funny? Like this has been a week of like reviews, like positive reviews, because I think Nicole also gave us a shout out this week. Or give Terrell a shout out, which I'm an extension of him. So yes, we're both getting a shout out. But that was pretty exciting as well. So yeah, some really good feedback. I think it just it's good to kind of get a sense, that you're headed in the right direction. So awesome.
Absolutely. I mean, and I think that that's what makes, today's topic and episode,
Very
the money
appropriate.
doctor,
Hmm.
so appropriate, because I think there are a lot of people who are experiencing some real serious problems in their business.
Yeah.
And it's frustrating because they don't really know how to navigate it. I mean, I was probably compare it to something like, let's say, if there was some type of sickness that you were dealing with, and you just, you were feeling this discomfort, or you were feeling this pain, something just wasn't right, and you just were like, hey, I can't really, shake this, I'm not really
Right.
getting
Yeah.
over it. You would go to a doctor, the doctor would do some assessments and probably try to help you diagnose, like, hey, here's where the problem is, and
Hmm.
then, hey, here's what we're going to do to make this better. And I think
Right.
not enough people are doing that with the finances, because one of the things that I hear a lot of times is that people are saying that they're having this type of problem, that type of problem. Well, oftentimes there is a financial diagnosis that is related to that problem, and there is a prescription that you can use. And if you follow it, you can actually start to see that problem resolve, and you'll start to see greater financial benefits. So I think today's episode is very timely.
Yes, I agree, especially because I did not take the advice that Terrell just issued. I went to the foot doctor for the second time yesterday. And just for some context, I'm not going to digress because I want to stay on target, but I think this is actually a perfect sign or a perfect example. Went to the foot doctor. My foot had been hurting for a couple of weeks. And I was just like, oh, like maybe I'm just sore. Maybe I just kind of sprained it, did it the wrong, did something wrong. And after like neglecting the symptoms for a little bit, I finally decided to go in and get it checked out. And they did an x-ray, and it looked like my big toe there was a spleen. Is that what it's called? Like a tear. And she was like, yeah, so it looks like you kind of have a small tear here. You probably need to address it. And I think it's the same thing with business owners sometimes, where when you have those common symptoms, a lot of times, you're just trying to figure out how to kind of like just trying to jump along or bounce along and kind of stay in the game long enough, because you have other things that, you're trying to focus on running a business. That's the reality. And so it's important for your health and for the health of your business to take time to really understand these. And so I'm excited to jump into some of the common problems. So Terrell, where do you want to start?
All right, so the first one we're going to start with is, here's a actual problem or something that someone has said, or actually multiple people have said,
Yeah.
is, all right, I often feel like I can't get a break because it seems like bills and expenses are just coming in from everywhere. And I'm just scrambling to, pay this bill, pay that bill. So the lights or the business doesn't get shut down. So we keep operating. And I just
Mm.
don't feel like I have any relief. And so when I hear that problem, I would say, well, I'm gonna kick it off to you first. When you hear that problem, what do you think the diagnosis, like? What is causing that problem?
I think it is a forecasting issue or budget. Let's put it simply a budgeting issue. That's what I think, because it sounds like the business owner doesn't really have an idea of what's going in and out of their business, right? Like it sounds like it's very reactionary. It's just I just can't come out for I can't catch my breath long enough to be able to actually make progress. And so that tells me that things are catching you off guard. What about you? What are some like what do you think about?
Yeah, I mean, I definitely think, my first thought was this is a budget and forecasting issue.
Mhm.
And what it really comes down to is we need to sit down and we need to actually just create a budget for you. Like,
Yep.
and not necessarily just, hey, just create a random budget of, hey, well, you should only spend 3% on this or 2% on this. Like, we actually need to look at your historical data. We need to
Yeah.
look at probably we need to start with your income statement, dig into the details, figure out where have you been spending money, how
Mhm.
frequently have you been spending money in these different places. So then we can start painting a picture of like, hey, based on what we know about your past habits, based on what we have an idea about what's going on now let's paint a picture of what the future is going to possibly look like if you don't make any changes. Because
Yeah.
I think what that starts to do is that will really help them really get ahead of, hey, what expenses should they be expecting? Now, of course, there's probably going to be some expenses that are unexpected expenses, because that does happen. But I
Right.
do think when you do have a good handle on the things that you should expect, you can also set up a plan to say, hey, let me build in some cushion so we can deal with some of the unexpected things if they do happen to come up as well.
Yeah, and I think unexpected stuff, I mean, unexpected stuff is expected. I don't think you are expected to know everything, but I do think one thing that helps is if you can predict 85% of your expense, I mean, that's going to make your life a lot more easier. So, and I think, one of the things that I learned when we did the session earlier this year, we did a session earlier this year in one of the small business CFO sessions. I think the budget and forecasting was I think it was the second topic of the year that we covered. And one of the things that we realized is I think a lot of people, when they think about budgeting and forecasting, they really put like this whole big, grandiose, like process behind it. And it's like, no, it doesn't really need to be that large and big and complex. A budget and a forecast is simply going to tell you, hey, like Terrell said, where is my money going? Where is my money coming in? When is it going out? When is it coming in? Because the reason why you're probably feeling like you're drowning is because you're not matching when the money is coming in and when the money is going out. So you just end up like you don't know, first of all. And the reason you don't know is because you're not doing the exercise. But I think that's a really good symptom, and one that a lot of business owners face.
Absolutely. Yeah. I mean, and this year, I mean, we started doing that where, because we noticed that we did a lot of forecasting and budgeting with our existing clients. But what we
Mhm.
realized is there were a lot of people who aren't our clients that just don't have that. So we just started making it available. Like, you know what? We're just going to create a service to where, people can pay us $500, and pretty much in 90 minutes, we're going to sit down and we are going to build out a logical forecast that it makes sense for your business,
Yeah.
because they may not have needed to hire us on like a month to month basis. They just needed that to get a good starting point. And so we started making that service available to people. And I have personally been surprised of the number of people who are like, man, this is a godsend. I am so glad you guys are offering this budget and forecasting service, because I had no idea how to get started and I needed some help in this area. So I definitely think that is a great one. So
Yeah, and I'm constantly amazed, I don't think I'll ever be tired of seeing people's reactions when we help them and they're just like, man, like for them it's just like a light bulb goes off. And for us, I think as accountants sometimes we're like, man, like this is just it makes sense because we do this all day. You know what I mean? Like it's easy when you do something and it's your job all day and you're just like this makes sense to me. Like it's easy, but you don't know how much it really, revolutionizes and changes the life of someone where they're like, man, like I finally get it. Okay, the numbers make sense. I know what I need to go do. And that light bulb going off for me is definitely like it's very encouraging and exciting to see.
Absolutely. So,
Mhm.
what's our next symptom that we are dealing with?
So I'm really excited about this one because this is a very common problem. So the symptom is okay. I'm just gonna read it off here because I wanna make sure I have it right, and I want to do something a little bit different, Terrell. So I'm gonna read the symptom, and then I want you to guess, or based not you're not really guessing because you have the experience. Based on your experience, what would the problem be in this situation? So the symptom
Okay.
is I'm often afraid I won't have enough money to make payroll. I love my team and want them to be compensated, but not gonna lie, payday is always scary.
Oh, this is a cash problem.
There you go. There you go. And what are you recommending to this business owner? It's a cash flow problem. So what are you prescribing to them to help them fix this problem?
I think step one is, let me put on my doctor's, coat. All
We
right.
should have
Step
worn that for
one
the episode
is
today. I should wear my scrubs for the episode today. Okay, go ahead. Sorry.
maybe I'll come back with a stethoscope or something.
There you go.
All right.
All right.
So step one, I think is we need to look at your cash flow, you know, your cash flow. And to be just very straightforward, what cash flow is, we need to follow the money in your business. We need to see
Mhm.
how money is coming in and money's going out. Now, the easiest way to do that is to look at your cash flow statement. And by looking at that, we're going to be able to see how is money coming into the business, how's money going out. We'll see how much is coming in and how much is going out. Because once we start looking at that, we can start understanding, where some of the challenge or the problem is. So yeah, a cash flow analysis is definitely the medication I would subscribe for this issue.
Okay, then. All right. I mean, I agree. I think that a cash flow analysis, to be honest, I think when we think about the income, the financial statements, I don't think the statement, a cash flow or the cash flow statement gets enough love. But it really is like when people talk about cash is king, like cash is really the king of your business. So you can put together a nice income statement, you can put together a nice balance sheet, but there is nothing like your cash flow statement to really give you a sense of, like Terrell said, following the money. So yes, I think I would say if we were to give awards for the most underrated financial statement, I think it would be the statement of cash flow. But
Yeah, I mean, we should
yeah.
make a meme for that. Like, I know that would probably do well on LinkedIn. Like,
Yeah.
hey, the most underrated or underappreciated financial statement is the cash flow statement.
Oh, watch me. I'm about to create that after this episode. But yeah, because I mean, it's true. It is like the statement of cash flow is just, I mean, I'm not gonna lie. Like, even in my corporate roles that I've worked in, but for larger businesses, people did not spend a lot of time on the statement of cash flow. Everyone's income statement, balance sheet. And I mean, like really, cash is king. Like if you run out of money, and we've talked about this, like, right? What is the phrase that we say when the cash is like king? I'm gonna do this badly. When the cash
I
is
will, I
down,
will, I will
thank
say
you.
it.
Please do it
So,
because I'm really
so,
struggling.
so it's like chess. Cash is king, and when the king is down, the game is over.
There you go.
And so when it comes down to running a business, you run out of cash, it's game over. Like if you don't have cash to fund your business, and you could have a great idea, you could even have a profitable business, meaning like you're able to generate more sales than expenses. But if you're not able to collect and get the cash in, that very profitable business is going to be sold to someone else, and if they have enough strategy to fix the cash problem, they'll be running your business instead of you. And so I would definitely say that, yeah, we need to do a cash flow assessment. I mean, and I think that's something that, a lot of business owners that I've been talking to as we start digging into things, especially
Mhm.
like businesses that get, let's say, north of 750,000 a year,
Mhm.
like that's where I really start to see, some real cash flow issues come into play, because you're hiring people, you're trying to invest in growth and expanding. So cash flow management becomes very critical during that phase.
Yeah.
And also during that time, it's you start, bringing on more customers than you can actually interact with directly.
Yep. Yep.
So if you don't have a direct personal relationship, if a customer isn't paying their bill, then you don't always know. So it's like when you hit that probably 750 and above, like cash flow analysis and assessments become very, very critical, because that's what's going to allow you to stay alive as a business.
Yeah, and I think I want to say one more thing to what you said, because you made a really good point about once you get north of 750, it becomes even more critical. And I think sometimes when there's more money flowing into the business, like when revenue is no longer a problem, it's like, man, we have more and we have more money than we've ever had in this business. I think sometimes it's easy to just think that the revenue is going to fix the problems. It's going to fix all the problems. But a lot of times people don't think, "Oh, I'm also hiring. Oh, I'm also moving into a bigger building. Oh, I'm also, I need more infrastructure, whether it's, online or physically, to help support the customer base that I'm supporting." And so I think people don't really think that as your revenue grows, oftentimes, unless maybe you're a SaaS business, but oftentimes your expenses will also grow. For the most part, like just in operating the business. And I think sometimes people neglect that. And then you end up in situations where you're spending all this money and you're like, man, like crap, like I'm making more money than I've ever made, but I still am having payroll cash flow issues. So important
Yeah.
one.
All right. So the next symptom is, and this is probably a very painful symptom, is,
Mm.
the interest rates on these short-term loans are killing us. And they are pretty high on these. I call them bad money loans.
Ooh,
And we just can't seem to get away from having to use these short-term, whether it's payday or even whether it's cabbage
the
or
worst.
whether it's blue vine, some of these very high interest rate short-term
Mhm.
loans, because we're always needing more cash. So when you start to hear that, what's kind of your thoughts on that?
My thought on it is it sounds like they have a business model issue. And what I mean by that is it sounds like it's kind of a combination of a couple of things. So it's either their sales is an issue, or maybe they have too many expenses, or maybe they're just not collecting, on their invoices in time. So that would be kind of my thought. Like, I think it may be one or the other. There may be multiple things going on in there that may be driving that, them having to constantly go out and get those high interest loans.
Yeah, I would agree. I mean, I've seen this with several clients, and one of the things that I've noticed a lot of is that, this is a business model problem. Like, your business model is not profitable enough for you to do the things that you're trying to do. So
Mhm.
we got to take a step back. Either we need to raise prices, or either we need to figure out how to cut costs. We need to figure out how to deliver our product or service at a more efficient way, and that's a business model problem. And then I think also, and something we've alluded to before, is, hey, the people that owe you money, you need to make sure that they pay you.
Yeah. Definitely, absolutely. And I think the overall view that I have is, and I mean, I've done this myself personally, so I'm not going to say that I don't think anybody's perfect. I think you just have to be intentional about it. Is really understanding, like you said, like, okay, your sales, what's coming in, the timing that it's coming in, is it coming in time to cover your expenses? And really being able to understand, like, okay, what's the problem here? Is it a money? Is it a not enough money problem? Is it money isn't coming in time problem? Or is it just, hey, you spending too much money? And sometimes,
Yeah.
you wake up and you're like, oh crap, like I've spent X, but I only have, X, I only have Y. And you're like, okay, the numbers are not matching. And at the end of the day, and I'm using all my quotes today, men lie, women lie, but the numbers don't lie, in the words of Jay-Z, which is my favorite accounting quote. But I do think a special shout out to Chris Word for teaching me that one. But I do think that, I think you need to be able to compare what's going on with both scenarios to really assess what the issue is.
Yeah, and I think here's a very practical way of assessing that is when you look at your business and you ask yourself, okay, on average, how much am I spending to operate my business? Just look at all your expense. Let's just look at last month. How much money did you spend in your business? Then let's look at, okay, how much money did you have coming in revenue and sales? Now, if your expenses are above your revenue, then okay, that's
That's a
probably
red
where your
flag.
answer is.
Yeah.
Like we either need to get the sales up or we need to reduce the expenses or a combination of both.
Hmm.
But if you're in a situation where your revenue or your sales are higher than your expenses and you're still finding yourself in this situation, then it's probably a collections issue, or I guess they would say a timing issue,
Hmm.
meaning you're paying your vendors or you're paying expenses before your customers are paying you. And you
Right.
got to figure out how to adjust that timing. And one of the easy ways to do that is to look at an AR aging report where you can see, hey, who is 30 days past due? Who is 60 days past due? Who's 90 days past due? And then how do you create a consistent process to follow up with the customers who are not paying their bills? And once you start really looking at that simple strategy, that can solve the problem for a lot of people.
No, that's good. I think that's a really good point. I was just thinking about, if you have an income statement, or you have your financial, or your accountant is keeping up with your financials, or let's say you're doing your own financials, this is something you can do in a maybe in a matter of 5 to 10 minutes, in terms of just your revenue, like comparing the money that's coming in to the money that's going out in terms of your expenses. And if your number is negative, then okay, like Terrell said, either you need to reduce your expenses, or hey, you need to bring in more money through the door. So really leveraging the financials and the numbers that you have, to really, really understand where your business is. So.
Absolutely. So I'm curious now, what is the last symptom that you want to talk about for today?
Okay, so I think the last one is a very common one. And the one I want to talk about is, you and your staff are constantly working, but it seems like there still isn't enough money, and they don't have the capacity to work any more than they already are. I mean, listen, I think this is one we've dealt with. I won't speak specifically for you as the CEO, but I think this is one that, like, our business has kind of dealt with because of the structure of accounting services, where you're kind of going through that point where you're growing, but like, man, like, okay, you've grown and you kind of have that point where it almost seems like you're capped at that. So I want to get your perspective, because I'm actually interested, because I think this is something you've dealt with in our business. So what do you think if somebody comes to you and tells you that, hey, Terrell, like, my team and I are constantly working. We're working a ridiculous amount of hours, in my opinion, and there's still not enough money. And I just don't feel like we really have the capacity to work any more than we're currently working. What would you tell them the problem is?
Yeah, the most straightforward and probably uncomfortable answer is your prices are too low. I mean,
All
that's
right.
what it really
Okay.
comes down to. I
Okay.
mean,
So,
you're doing low value work too often.
what is that? What do you mean when you say low value work? Like, how do
So
you define
typically,
that?
typically when you're looking at this, I mean, you're like, okay, all right. If if my team is working, we're at full capacity, we are doing as much work as we possibly can, or let's say
Mhm.
we're at 90% of our capacity.
Okay.
Well, if we're still running into money problems, then that probably means is we are spending all of our time working on the lowest price stuff. Like, for example, I was working with a law firm once, doing some work with them and analyzing some stuff because they were having this exact same issue. And
Okay.
so we did what I call a gross profit analysis. And I started looking through the numbers. And then I realized, I said, you know what? 80% of your time is spent on the type of work that you make very little money on, which means only 20% of your time is actually spent on the cases that generate the most profit. And when we looked at it, we realized the reason why that was the case is because they were advertising and they were marketing the low value work. So their team was constantly working. But my thing is, like, if you're not making that much money on the work that you're doing, you're going to have to work a whole lot if you're going to try to even survive. And it's just, for
Yeah.
most businesses, you can't survive if your prices are too low.
Okay. All right. No, that I think that's a really good one. And I think a lot of times people, I'm gonna give a counter because I'm actually interested in diving into this a little bit more. But some of the responses maybe, but I'm helping people. Like I'm helping make people's lives better. Like, I can't charge people a lot more than I currently charge. Like, how would you balance that?
Well, the truth of the matter is, you might be helping. I mean, you really are helping people's lives get better because you're giving them something of value at a very low price. Like, you're funding, I mean, you are subsidizing, what they are getting. And I get it. But also, the question that I would ask you is, well, if you keep at this pace, like, how long are you going to be able to survive? Because while you may be helping people, and I'm like, hey, you better hope that you're helping people, because at this rate, looking at your numbers, you're going to need some help pretty soon. So you better hope.
Dang, Terrell, way to put it on him. Like, hey, it is what it is. Hey, you could help people and make the money, or hell, help people and close down. I don't know what to tell you.
but I mean, I would say, in all seriousness, I mean,
Yeah.
I wouldn't tell a person. Maybe I wouldn't tell them that bluntly like that. I mean, unless we had a good rapport. But what I
Yeah.
will tell some people is, because we do it ourselves. I mean, like, our
Yeah.
average price on bookkeeping support services is probably somewhere between $800 to $1,000 a month, is kind of what some of our clients are spending. And when I looked at it, I said, hey, there are some smaller businesses that can't afford that. We would still
Mhm.
like to help them. So what we did is we set a limit. We said, hey, we are only going to take on 8 clients that fall below that.
Yeah.
Once we hit 8, that is all the people we have the capacity to help. Now that
Mm.
we've added more staff and we've grown some, maybe we can extend that a little bit more. But I do think, as a business, we had to put a limit on our charity,
Yeah.
because we are a for-profit business, which means we need to generate a profit. Even for those companies that are nonprofits, you still have to put a limit on your charity if you don't have unlimited resources. And
Yeah.
so I always tell business owners, like, yeah, you may be great that you're helping people, but maybe we need to set a reasonable limit on how many people you can actually afford to help and still stay alive.
I like that. I really like that, because I think oftentimes people think that when they think about charity, they don't think about the numbers, because it's like, no, there's no limits. Just give everybody. Everybody needs something. But I'm like, no, even a charity needs to make enough money to be able to be charitable. So at the end of the day, if you want to be charitable in your business, you need to set a target that is realistic for your business, because the reality is, in order for you, if I think about it like this, in order for you to continue to be profitable, like in order for you to continue to be able to help people, you need to be profitable. And you can't be
Yeah.
profitable if you're giving away stuff for free all the time, or if you're charging, like Terrell, you said, if you're doing low value work, like you're barely going to have enough money to sustain your lifestyle and your business, and pay your employees to be able to continue to do what it is that you want to do. So I thought that was a really, really good one. So just do you want to go through just a recap of what we've talked about, or you think people go back and listen to the episode?
I mean, I think people can definitely go back and listen to the
Yeah.
episode, but a couple of things to bring up. I think, you know, if you're experiencing issues where, hey, you just don't know what expenses to be prepared for, things are catching you off guard, hey, that's a forecasting problem. You need a forecasting process in place. You know, and if if payday is always a cash concern for you, a cash flow assessment, cash flow analysis, that's where you need to spend some time. And if you're constantly, having to take out short-term loans and go get these short-term financing, we really need to take a look at your business model to see, does your business model make financial sense? And then, of course, if your staff is working at capacity, you are working at capacity, but you guys are still struggling, this is likely going to be a pricing issue, meaning you are spending too much time on low value work. So we either need to raise your prices, and there are some unique strategies that you can use to effectively raise your prices. And also, we need to set a limit to how much charity work you do. And charity work isn't always work you do for free. It's just work you might be doing at a significant discount. And so you need to set a limit to that so you're not hurting your business overall. So I think that's a good recap. And I am very interested in this week's tax tea. So what do we have for this week's tax tea?
So for this week's tax tea, we're talking about a Newport commercial fisherman who pleaded guilty recently. This tax tea is actually relatively new, February 2023. And he pled guilty to tax evasion. So I thought this was a very fishy story. So I wanted to share. See what I did there?
I see what you did there.
So basically the story here, just to recap. So the gentleman will be getting 5 years in prison for this. And essentially he worked the story here is so for 8 years, between 2012 and 2020, our friend did not file a tax return. So he was doing work for 8 years, made about 500,000. And this is just for context, because I know a lot of people talk about, how we come on here sometimes and we talk about millions of dollars. So I'm just going to do real quick, Terrell. What is that? 500,000. I'm using my little accounting calculator here. Bear with me.
For how many years?
$500,000 over 8 years. So he was making $63,000 a year. Okay.
Wow.
If I was to average it out, I'm sure maybe this business, fisherman season. There's probably some seasonality to being a fisherman. I don't know.
A lot of seasonality.
Yeah. So yeah. Okay, Terrell, come on now. Okay. I'm not familiar with the ways, but so $500,000 over 8 years, that's about 63 grand a year. Not too bad. I'm sure he has another business, but I think he was doing this business on the side. And as the IRS website described it, he was dealing heavily in cash. Like they just made it sound like he was doing like a drug transaction. I'm like, was he selling drugs with his fish or what was happening? So it says he was dealing heavily in cash, which probably meant that when he was contracted for work during the fishing season, he probably was like, just pay me in cash or whatever. So it's probably money he was getting under the table for this work. And so for 8 years, he did not file a tax return. And the funny part also is he also had a stolen identity somewhere in that process where he was working under someone's name. So he impersonated somebody else. I don't know if in this moment, maybe he thought all right, they might be on to me. So maybe when they asked him for information or a social security, he gave them someone else's name. And so provided false information, false identity, was working under someone else's name. So, basically, yeah. He just did some fishy stuff, finally caught up with him. So now the penalty that the IRS is charging him with is $170,000. It's not really a penalty. It's a combination of what he owed plus, I guess, the delays and the back pay and all that stuff. So $170,000 is what this gentleman owes. And yeah, so in terms of honestly what could have been done in this situation, honestly,
I guess, but how many years in prison is he going to get?
Oh, possibly 5 years, maximum of 5 years in prison. I think that's a little, personally for me, I think that's a little bit aggressive, if I'm being honest. On the identity theft side, maybe not so much, But
I mean, he gonna need to get out there and go fishing and pay this bill.
5 years though, like that's the max sentence. So to be honest, like some of these penalties that I've seen, like 5 years is the max. He'll probably get 2 years and be out. Maybe, I don't
I
know, but
mean,
that's
I
still
don't
a
know if
lot.
he can afford 2 years. I mean, the guy is making $62,000 a year doing this, but he
But
owes $170,000. Like he needs to get fishing like right
but
away.
honestly, I don't think this is his full-time job. Because you just told me
Okay.
there's a lot of seasonality around it. So I don't think this was his full-time job. What I think, let me tell you what I think Mr. Bautista was doing. I think Mr. Bautista was working a full-time job
Hmm.
and paying his taxes there, because it doesn't mention anything else about his other job or him having another job,
Hmm.
because there's just no way $62,000, that's not a lot of
I
money.
mean,
But
you can live on 62,000. I mean, in some of these, I guess maybe
fishing
some
towns,
fishing communities.
yeah.
I mean, they aren't usually fishing communities aren't in the major cities. I don't know what the cost of living is in the Newport area.
Newport News, Virginia is where he was
Yeah,
living.
I'm not
So
sure what the cost of living is there, but
yeah, so I don't know either. It looks like I'm looking it up now. What does it say? Cost of Oh, okay. So the average cost of living is $2,000. I don't know what this is. It says which is in the top 5% of expensive cities in the world. That doesn't
okay,
even make sense. But yeah, no, that doesn't. Okay, so the rent cost. Okay, I got it. So the rent
okay.
cost is about 2 grand for one person.
Hmm.
Um, Rent and utilities about $1,300. Food on average a month costs about $547. About $65 on transport. And quality of life is a 67 out of 100. And the monthly salary after taxes is about $3,500 a month is what people make
Okay,
in salaries. So
gotcha. All right.
I
So,
mean,
what's our accounting takeaways on this one?
listen, I don't know how he got caught, but I would say my accounting takeaway on this one is he should just pay the taxes, because now you have $63,000 that you basically evaded, or you were trying to evade paying taxes on. And now with the penalties and everything, I bet you the money that he actually made was it really worth it at this point, because now you have to work to pay $170,000 and you're not really going to enjoy fishing anymore. Now, well, I don't know if you enjoyed it, but now it's just going to be you're working to pay off $170,000. So maybe this is not an accounting take, but I really feel like it wasn't worth it, especially for $63,000 a year.
Yeah, I mean, I think overall, I would say it's just reporting your income. It's just because some people believe that filing a tax return is optional.
Oh
Um,
yeah.
that is not the perspective that the IRS has. Now you may be delayed or it may take you a couple years, but I do think it starts to impact other areas of your life. Like let's
Mhm.
say, for example, you're trying to buy a house, or
Yeah.
let's say if you're trying to start a business and get a business loan. A lot of times they want to see, well, what do your last 2 or 3 years of taxes look like? And if you haven't filed them, then just like you could set yourself up for some more pain than necessary, not to mention, owing back taxes and stuff like that, to where I'm like, just, you know, include all your income and file your taxes.
Yeah.
Um, I know it may not be the best answer, it may not be the answer that people love, but it's just like, hey, include your income, take legitimate expenses and legitimate deductions, but include all your income and actually file your taxes so you don't have this hanging over you. So
Cover your
I think
bases.
that's a good one.
Yeah, cover your bases. Don't let the IRS come after you, please. It's not a fun experience. But that concludes our tax tea for this week. And
Awesome.
yeah,
Well, thank you everyone for tuning in. Until next time. And also go over to the Earmark app if you are a CPA and you are looking to get CPE credit for listening to this episode. You can get CPE for listening to all of our episodes when you listen to them on the Earmark app. So head over to Earmark, listen to the episode, take the quiz, get your CPE credit, and start early this year. Don't wait until December
don't be like
and
me.
try to get all 40 hours in like the last 3 days of the year. Do it early. And until next time.
Hey, it's your girl Tia Robertson. I'm the host of Entrepreneur Insider. Right here on IETV every Thursday at 6 p.m. Eastern for entrepreneurs and news that you need to know about. See you there.
Welcome to What's Going On? My name is Demita Joe. Each Wednesday, you can find me here at 3 p.m. I'll be over here discussing different things that are going on and try to bring you a boost of positivity for your week because we all need this. We're going to share some feel-good stories. We might find a hometown hero. We may take a look at some trending topic. And sometimes we might even find a lesson in a not-so-warm and fuzzy story if we can. I'm Demita Joe, and I'll see you guys on the next episode right here on What's Going On?